Hi, ladies and gentlemen, fellow traders. Welcome to another episode of Weekly Forex Outlook with Chart Engineering Pro. I really appreciate you for taking our time to watch this video. And if you are here for the first time, welcome. Kindly click on the subscribe button and like our videos if you find value with what we share. And don't forget to turn on your notification bell so you get notified anytime we upload videos on this channel. So let's get right into the business of the day. We're going to have a quick recap of last week, what happened last week. So last week we shared a setup on Gbpjpy, and we're expecting Gbpjpy to react from this area of interest and then buy from here to the upside. Unfortunately, we got stopped out because we took the trade with a very tight stop loss. It was a buy limit actually, and I think there was a news reaction around that time. I think the PMI news for the USD, and I think it affected this trade. We're wicked out on this trade. So if you had gotten your entry within this zone and your stop loss below this zone, you should be in profits, or you should be in this trade by now. So getting into this week, this new week, we are going to look for another opportunity to buy on the same pair. Then we have the AED and ZD, which is also making its way to the area of interest as we described last week. So I think we need to allow price to do its own thing, and let's leave price to do its own thing. Give it some time for it to develop, then we can take advantage of it. Same with Euro AUD. Price never made its way to our areas of interest, so we'll look forward to that in the coming week. Same with Euro NZD. So we are expecting price to drop to any of these two areas of interest, then we can look for buying opportunities to the upside. So getting into the business for this week, let's look at the economic calendar for the coming week. So on Monday we don't have any high impact news. On Tuesday we have the Bank of England Governor Bailey speaks, and we also have the various flash PMIs that will be happening on Thursday. So Wednesday too does not have any high impact news. Thursday we have most of the flash PMIs happening on Thursday, and one news we should take caution of is the Euro main refinancing rate and a monetary policy statement for the Euro. That news is very, 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 very volatile when it's released, so let's pay attention to that. And that's happening on Thursday. And then we have on Friday we have the Gbpjpy retail sales. So basically this is what we have for the coming week with the economic calendar. So let's jump into the charts for this coming week. So as I described in the previous episode, on episode 1, DXY. So this chart is DXY. So DXY is currently reacting from a very strong support area. It has given us a very strong momentum from that zone. So we are looking forward to see DXY shifting bullish, but until then we have to see price shift structure on a weekly time frame, and currently we just had a wick from that weekly structure, and we were not able to break above this zone. So technically on a weekly perspective, DXY is still bearish, so we have to look out for bearish setups on DXY for the coming week. So as we shared last week, this is the same DXY as we shared last week. We're expecting price to react from either this zone or the next zone above, and I stated emphatically that price will only be considered bullish if we are able to break this line with a weekly candle that is going to close above this zone. But price was not able to close above this zone, which makes us technically still bearish on the DXY. So what we are going to be looking out for this week is shorts for DXY, but then if we are able to break above this zone to the upside, we should look out for a possible retest or price to drop way below to give us like something like a double bottom and then take us to the upside, or price can form something like an inverse head and shoulder, break above the zone, come retest around the zone, give us a break of the right shoulder, then take off from here. So let's allow price to do its thing, but I'm very bearish on the US dollar for the coming week. So let's look at the Japanese yen index. So the Japanese yen index did exactly as we predicted last week. So what I'm going to be looking out for this week is two options. If price is able to drop to this zone, give us a strong bullish reaction to this zone, breaks above, gives a retest, we can look out for buys in this direction for the Japanese yen index. Then again, you can also wait for price to close below this zone on a daily time frame, give us a possible retest around this zone, and sell to this structural point. So these are the two views I have for the Japanese yen index, but I am very bearish on the JPY. I'm very bearish on JPY. So let's move on. So last week we shared the setup on EURUSD. So there was actually a zone above here which got violated by the market, and price found its way to this second zone. So we are currently expecting price to break out of this bullish flag to buy to the upside, just like we saw on DXY, where DXY is currently at an area of interest where we can see some sells on the DXY. So if DXY is able to sell, then we should be looking out for these buys on EURUSD. So currently bullish on EURUSD. This bullish structure will only be violated if price breaks above this zone on a daily time frame or a weekly time frame and closes below it, counts for a retest and sells. That's the only way I'll consider EURUSD bearish. But until then, we are bullish on EURUSD. So on to USDCHF. USDCHF is currently developing a harmonic pattern called a deep crab pattern on a daily time frame. So this is the X, we have the A, we have the B leg, the C leg, and then the possible D leg, which should come all the way here. So we are still expecting some sales to complete this particular deep crab pattern. So if we are looking out for sales, then price is also shaping up with a very nice bearish flag, which is also approaching, or which has somewhat slightly retested an area of interest here. So what we'll be looking out for is to see a break, maybe a deeper pullback to the outside into this zone, have a break below this bearish flag, get a retest and sell to complete this particular deep crab pattern on the daily time frame. So on to the next, we have USDCAD. Currently USDCAD is also in an area of interest, and we have a formation developing which is a deep crab pattern. These are X, these are A, these are B, our potential C leg, then our D leg over here. So this is how we're going to approach this trade on USDCAD. We're going to allow price to develop some more. We can't just jump into the trade. So what we are going to do is wait for price to drop, to break on a daily time frame, break this structural point, give us a pullback, come back, give us a retest and sell to complete this deep crab pattern on the 4-hour time frame. But looking at what is happening on the XY, what we can do to play it safe is we can target these lows as our first target and then hold to the completion of this pattern. So this is what we have for USDCAD. We are bearish on USDCAD. The only bullish scenario is if price is able to continue bullish and break above this zone and come for a retest, then we know that USDCAD is bullish. But until then, we are still looking out for bearish moves. Then I shared this trade, EURCAD. This EURCAD, I shared it last week, and where we're expecting price to break below this zone and come for a retest. Unfortunately, the retest came, but then the confirmation that came was around the last hours of the Friday session. So I didn't jump into it. I decided to ignore and wait for some more price action when market opens in the coming week. Probably the London session, maybe we can have a reversal pattern develop here and before price drops and start selling very well as we're expecting it to do. But you can see this is a very strong bearish 4-hour bullish engulfing, which we could have taken the trade and still put our stop loss at the top and hold. But then there can be surprises or market gaps when market opens, so you just have to be conservative and wait for some more price action in the coming week before we take our sales. So we are still bearish on EURCAD on this particular trade. So let's look out for this sell for next week. Then we have Gbpjpy, GJ. GJ is still bullish, and since we got stopped out in the very first setup coming from last week, what we'll be looking out for the coming week is a possible pullback to this area of interest, give us some reversal patterns or bullish signs to take it to the upside. So we look for buys to this zone, and then as our TP1, and then this zone as a possible TP2. So we first target this zone, this TP1 before this TP2. So we are bullish on the Gbpjpy, and then we go into gold. So we actually shared this setup on gold last week, where we're expecting price to give us a reaction exactly in this area of interest, and then we had some reactions, some fake outs during the week, and getting close to the end of the week, price was now shaping up properly. So as we can see, we have a structural shift, a 4-hour structural shift here at this zone. So on to next week, we'll be expecting a higher low around this area, or let's look out for a higher low, and we get a breakout, possible retest, then we buy to the upside. Or if we're able to get some reversal patterns within this zone, or in lower time frames, we're able to get any bullish signs, you can risk your first entry around this zone, and when price breaks above and retest again, we take a second entry to the upside. So this will be our first target, this will be our second target, depending on how the momentum of the market goes. So we are very bullish on gold for the coming week. And then looking at this is Brent crude oil, that's UK oil. So UK oil is also developing something like a godly pattern, and somewhat also looks like an inverse head and shoulder. Sorry, also looks like head and shoulder. So what we are going to do with Brent crude oil is would expect a possible lower high to form, around this area. Look for a sell. Then we wait for price to break below this zone with a daily candle. So if we get a daily candle closure below this zone, we wait for a retest into this zone, and then take our shots to the side. So there are two options. You can wait for a lower high around this area, get a selling opportunity around this area to take our first entry, or wait for price to break on the daily time frame below this zone, and take the shorts upon retest of this zone to complete this pattern. So this is it for UK oil, Brent crude oil. And then we have German 30. German 30 is developing a pattern called the butterfly pattern on the 2-hour time frame. So we have our X, A, B. We are waiting for a possible C leg formation, for which price is currently in an area of interest. So we'll be looking out for either a double bottom or an inverse head and shoulder, or any bullish signs that will show that price is ready to take off to the upside. So if we're able to get these confirmations in this zone, we can take our buys from this zone to the upside to complete this 2-hour butterfly pattern. So we are bullish on the German 30. That's the DAX index, or DAX 30. Let's move to US 30. US 30 has a similar setup as the German 30. So US 30 is also developing a butterfly pattern, and that's currently giving us a change of character around this zone. And we had our B leg retracement around 78.6 fib level. So we are now waiting for a potential formation of the C leg, and then the currently price is currently in an area of interest. So if we're able to get a reversal pattern, inverse head and shoulder, a double bottom, or anything that shows that price wants to go bullish, we can take our buy from this zone to go and complete the butterfly pattern on US 30. Or if price drops further into this zone below, we can still look out for the buys from this zone as well to buy to the upside to complete this butterfly pattern. So that's it for that's it for US 30. That's the Dow Jones. Let's move to the last one for the week. That's S&P 500. So S&P 500 is currently very bullish, and we are looking out for bullish opportunities to buy to the upside. So we are expecting price to currently expecting price to drop a bit further to this area of interest, give us some bullish signs, then we take our buys to the upside. So you can look out for a 1:3 risk to reward around this area. Since it's in the all-time highs, we can look for 1:3s in this area. Or alternatively, what we can do is we can look at the US 30 setup, where we are expecting US 30 to buy to complete a pattern. So what you can do is, when you're able to catch the S&P 500, you can hold until US 30 completes its pattern, then you get out of the trade. So that's also another option for you to take the trade. Either you look out for a 1:3, or you go along in sync with the US 30. So thank you for sticking to this video and watching up to this extent. I'm very grateful. And if you haven't subscribed yet, kindly subscribe. And if you found value with what I shared with you today, kindly like and share, and turn on the notification bell to get notified anytime we post content on this channel. And I'll encourage you to also manage your risk properly. That's the key to stay in this game for long. So make sure you are applying proper risk management to your trades, and then we hope for the best. So I wish you a profitable week ahead. Have a fruitful week, and I'll catch you again on another episode. Stay safe. Bye.